Hey guys, what's up? Hi, this is CA Lalit Khandelwal. This is me, and I'm a practicing chartered accountant, and I am also a teacher, and I teach subjects like accounting, economics, and finance. Today, I'm here to discuss along with you guys the topic called accounting. Yeah, I know most of you know the topic accounting, but still, I feel that I can add certain inputs to it. Anyways, now first of all, what does the term accounting means? Yeah, as we all know that the main purpose of accounting is to record transaction. Yeah, right, and to also to ascertain the result of the operations of the business, and also it tells us the financial position of the business. Anyways, these are certain terms that we already know. So what's the new thing that I'm trying to communicate to you? See, when we talk about accounting, it not only talks about recording of transaction, but it also talks about evaluating the business. You must have heard about a term called bookkeeping. Yeah, bookkeeping is still here. If I say that bookkeeping, the term is only concerned with recording of transaction, but accounting is a broad term. It also covers the evaluation of the business. And apart from this, it also helps us to suitably present the information to the users of this accounting information. Now, who can be the users? It can be the owner or the manager or the employees. The employees might want to know that is the business earning, are they safe to work in that organization or not. Apart from that, there are other external users as well, like the government. It can be the creditors, it can be the lenders like bank. They might be interested to know that should we finance this business or not, is it right to finance this business or not. So these are all the people who are interested to know about the financial position of the business. Anyways, so I just want to clear out the thing that accounting not only is concerned with recording of the transaction, but also evaluating. Now this is a typical accounting process. You look here that first of all we maintain the records. And how do we maintain it? We either make journal and ledger, or we make subsidiary book. Yeah, here I want to discuss a point. Now what's the distinction between journal, ledger, subsidiary book? See, journal is the book of original entry. We record all the transactions for the first time here, but sometimes we feel that that it is so stereotyped and we have so much of transactions to record that if we make journal for each one of them, it will be a very lengthy process. So what we do that instead of recording it in journal, we make subsidiary books for this purpose. Yeah, you are right. It's an or relationship between journal or subsidiary books. And once the transactions are recorded here, we prepare ledgers to know the balance of each ledger. Anyways, so one thing is very clear, that journal or subsidiary book. Now what is the subsidiary book? It can be a cash book, purchase book, sales book, bills payable, bills receivable, or journal proper. So basically we make a distinction that if there is any cash transaction, we will record it in the cash book. If there is any credit transaction, then we have to see the nature of the transaction. If it's a sale, we will record it in the sales book. If it's a purchase, we'll record it in the purchase book. If it doesn't fall in any of the category, neither under cash or bank or purchase or sales book, then we will directly record it in the journal proper. So the thing I believe is clear out of here. Now an important point I would like to discuss is that, is cash book and cash ledger the same thing? Technically no. Why no? Because had we made journals and we would have posted them to the ledger, it would have been called a cash ledger. But if we are recording it for the very first time in a subsidiary book called the cash book, then it's a different thing. Then it's a subsidiary book. However, the conclusions of both will be same, but still if we talk about process, there remains a difference. Okay, once we have recorded our transaction, okay, we are done with the bookkeeping stuff. So now we move on to the next part, that is we want to know that whether are we arithmetically correct in whatever we have done. So we prepare a trial balance for the same. That obviously we have done many debit and credit entries. So we would like to know that whether our postings, whether our entering of the transactions are correct or not. So we prepare a trial balance for the sake of checking that yeah, we have done everything correctly. Now what does correctly means? Suppose there's an entry, cash account debit to capital account. So it will appear on the capital account on the credit side and cash account on the debit side. So if it is not done in that way, if there is some error, this won't be tallying. Why it won't tally? Because instead of writing on the credit side of the capital, if it write in the debit side, then there will be two debit ledgers, so which will not make the trial balance to agree. So somewhere we will be checking that whether the postings have been done correctly, whether correct values have been posted, then only this trial balance will tally. And after the trial balance is done, dear friends, what do? We prepare the financial statements to find the results of the operation. That is, are we in profit or are we in loss, or whatever the case may be. So what do we make? We make the trading and PL account. Okay. So now I would like to put a stress on a fact that most of the questions you are being given with the trial balance. Yeah, you are right. You are being given with the trial balance having debit, credit, and those items. So what you used to do was that you were being provided with the ready-made stuff after the entries, and we used to prepare the trading and PL by using this trial balance, right? And once the trial balance, trading and PL is prepared, we would like to know what is the financial position, what is the position of our assets, our liabilities, because this provides us a picture of the profits or loss, not the positions. We won't be knowing that what is the cash balance after this. So what is the balance of my debtors? What is the balance of my creditors? So that is being shown in this statement, which is called the balance sheet. And this concludes the financial statement. So I hope till here we are okay with the thing. Now, I felt that most of you have a problem in understanding the term capital. So this is an illustration to make you explain that what does capital actually means. Now, let us take an example. Suppose I have a car of rupees 5 lakh, I have cash of rupees 1 lakh, and I have a bank balance of 50,000. So if I ask you that what is the amount of assets that I am having, you will say, sir, you are having an asset of rupees 6,50,000. Right. ये तो समझ में आ गया कि मेरे पास assets 6,50,000 के हैं. But मैंने बाद में आपको एक और information दिया, and the information is that I have a car loan also of rupees 2 lakh. It means that I have assets of 6,50,000, of which I have taken a loan of 2 lakh. It means I have utilized these funds to get an asset here. Okay. So now the point is that out of this 6,50,000, not entire my money is put to get these assets. There is a certain amount that is funded by someone else. So if I ask you what is that amount which I have funded, your answer will be 4,50,000. So 4,50,000 is the amount funded by me to buy assets of 6,50,000. So this amount represents capital. So in short, let us sum up. What is capital? It is that amount which has been put by me to get assets. So in short, I think you can conclude one more thing, that all the assets, whether if you talk about a person's personal assets or the assets of a business, will either be funded by him or someone else. So it is very clear that that's the reason why assets will always be equal to liability plus capital. I hope this point is clear. And next, one more thing, what are assets? Assets are those items of economic value, that is, we need to have money to buy them, that is expected to yield a benefit in future period. Okay, so there has to be some benefit coming out of those assets to call them an asset. So that's it. I hope this point is very clear to everyone. So if I ask you that how would you interpret this statement, you would be saying that, sir, there is land and building of 10 lakhs, there is stock of 6 lakh, there is cash of 2,50,000, and there is bank of 1 lakh. So there are total assets of 19,50,000. So out of this, the amount that has been obtained by outsider is 1,50,000. So what is the amount funded by me? Yeah, it's 18 lakh. So this is the amount of capital. So this is how you read statements. Okay. So now one more thing, capital is not something that you can touch or something that exists separately in a business. It is nothing but a representatory value that indicates how much amount is being funded by the owner himself. That's it. And how it is coming out, I hope this thing is very clear to everyone. So that's it. That's all for today. Keep on watching the next video I'll be putting up on recording accounting transaction. Till then, thank you so much. If you like the video, hit a like or share it with your friends. And if you want any suggestions, any suggestions for me or any topics you want in my upcoming videos, please comment or drop an inbox to me. And also like and share my page. Let's educate through social media. That's it. Thank you everybody.